In the earlier sessions, we got a glimpse into some of the legal and technical aspects of starting a firm. Today, we are going to delve even deeper by looking at the entrepreneur's checklist from the compliance point of view. And joining us today are again two specialists from VERTICES Partners, one of the fastest growing law firms in India. Vishal Mehta is an associate partner with VERTICES. He has been involved in advising foreign and Indian corporates, entrepreneurs, startups, social business enterprises, and other organizations on a range of legal and regulatory issues. He's a University of Mumbai alumnus and a lawyer with an appreciation for the arts. Particularly, he has an interest in drawing and painting. Welcome, Vishal, and thank you for doing this workshop. Our second speaker today is Vivek, who is also with VERTICES as an associate partner. Vivek's areas of expertise include PE and VC, joint ventures, and various areas under corporate and commercial legal advising. He's a National Law University Jodhpur alumnus and a sports enthusiast with a keen interest in hockey and cricket. And true to his profession, he also enjoys economic, political, and social work affairs. And welcome to you as well, Vivek.
Thank you so much, Sangeeta.
And look forward to a really interactive, sparkling session from both of you.
So firstly, thank you so much, Sangeeta, for the introduction, and thank you very much to FICCIFLO as well for providing us this opportunity to interact with larger set of people, young entrepreneurs or already entrepreneur people, those who are into the business. So as you have already stated in our last presentations, our colleagues have already spoken about how to set up a business entity, because there are certain set of business and kind of business entities which can be set up in India, like it can be in the form of partnership, it can be in form of limited liability partnership, or in form of the company. So this presentation is an extension to that presentation, wherein we talk about once the business has been established by an entrepreneur, there are a lot of compliance related and operational related challenges and operational related aspects. How to deal with those aspects, how to comply with those aspects, how to deal with your stakeholders so that you are able to achieve your business objectives for which you have set up an entity. So as you can see on the screen, that as far as our today's discussion is concerned, we'll be concentrating on these following points, like what are the legislations which pertain to business vehicles in India. For example, for company, it is Companies Act. For partnership, it is Partnership Act. For limited liability partnership, it is Limited Liability Partnership Act. What is the legal difference between a startup and MSME? Because business entities, because of a lot of incentives being given by Government of India, a lot of business entities, they want to categorize or get registered themselves as their startup as well as the MSME. So we will delve into what is the basic difference between getting categorized as a startup as well as the SME, and what are the benefits available there too. Then we will move on to what are the essential documentations. We have in our presentation provided for a generic, all-encompassing kind of a checklist which will be required to be adhered to by business entities. And we will also give introduction to what is the regulatory regime in India, as we know that laws in India are passed at the central level as well as the state level. Then there are certain laws which local municipal bodies can also implement and also legislate on. So we will cover all those aspects. And your idea being to concentrate on the operational aspects of the business. So my colleague Vishal will start from slide number 3, and then we will take it from there. And as far as questions are concerned, if any of the participants have any questions, we encourage you to ask your questions. If it is in the flow of the presentations, we'll be happy to take your question then and there itself. In any which case, we have that 15 minutes in the end of the presentation for question answer session. So we would encourage you to actively participate so that we make it a good event.
Yeah, so let everybody post their questions in the chat.
Right.
And I think we can all see the chat and take the questions over there.
Thank you, Sangeeta, for the introduction. So we'll begin with the presentation. The first aspect which we'll deal with will be the legislation pertaining to business vehicles in India. So, as we know, there are there are total 5 different vehicles which are there by which we can do the business activities can be undertaken by an entrepreneur or by a startup. We are focusing to the 3 parameters which are the 3 core essential business vehicles, which are partnership, LLP, and private limited company. The other 2 are sole proprietorship and 1-person company. But since the benefits which are there under the Startup India scheme and from an investor lens, these are the 3 ones which are the more essential. So we will delve more in detail about it. What are the registration requirements and how the management's been held by the firm. So we'll begin with the partnership. So what exactly is partnership? When 2 founders come together, there is a minimum requirement of 2% being forming as a partnership part of it. And partnership governs under the Partnership Act. There's no specific registration per se which is required under Partnership Act, but under the state of Maharashtra, there is a mandatory compulsory registration for a partnership to get registered themselves with the registrar of firm. So, and for the partnership, there is only in state of Maharashtra the compulsory registration is there. Otherwise, there is no mandate as such registration is required. Only a deed of partnership, 2 founders forming and having an idea at idea stage can form into a deed of partnership and begin with the partnership part of it. The advantages of partnerships are, from a compliance point of view, it's a very less, it's only an annual compliances which is to be undertaken by partnership firm. It's not that cumbersome, not that costly affair for the partnership for the compliance point of view which is there. The liability, however, it becomes unlimited liability. The partners are joint and severally liable for their actions taken by the partner or by the partnership firm, which is which is an unlimited liability, which is a red flag for any of the founder or any of the entrepreneur at the beginning of it. If there's an start with the business with the unlimited liability part of it. And as a legal status, if we see either from an income tax point of view, it's not considered as a separate legal entity or a separate legal person in eyes of law. Partnership is not being considered as a separate. So it is more linkage with the partner. If there is until the time the partners are alive, the liability is there on them, and it is linked with the succession on the partnership part of it. And the management, who is responsible in partnership? Partnership is the partners who runs the partner, the day-to-day functioning, and even the partners, whether it is an active partner or not, all are responsible under the Partnership Act. So these are the more key elements of the Partnership Act, which is there. There are minimum 2 partners and maximum 50 partners can be there. Move to the next model. The next model is a LLP. It's a limited liability partnership. It's a hybrid model. It's a hybrid model of partnership as well as private limited partnership, as well as of a company model. And it's a new avenue which was being introduced in 2008, and it gets governed through the LLP at 2000. There is a limited liability partnership at 2008. There's a mandatory registration which is required. The registration needs to be done with Registrar of Companies, which comes under the Ministry of Corporate Affairs. Again, the requirement over here is that there's a minimum 2 partners are required to form a LLP, and there is no maximum limit as such for it. The compliance compared to a private limited company and a partnership, it's a moderate. If we see the compliance is for the LLP is based on event based and on annual basis part of it. The liability, now this is the biggest advantage of limited liability partnership. The liability of a partners are limited. It's limited to the contribution which has been done by the partners, and partners are not personally liable the way the partners are liable in the Partnership Act. There is a limitation for the under the LLP or the liability of the partners. In the legals, as a legal status, again there is a partnership is considered as a separate legal entity in eyes of law. It's a separate entity which comes into flow. So it is not related. There's no perpetual succession for partner resign. The partnership will go on. So there is no specific legal embargo on LLP part of it. And the management of who is responsible for the running of the day-to-day affairs of LLP? It's a designated partners. Now, who are designated partners? There are 2 constructs of the partner in the LLP, 2 partners. It's a designated partner and the normal partner who gets appointed as a partner in the firm. Designated partners are the partners who are responsible for the day-to-day affairs of a company, for day-to-day running, the decision-making powers which are being taken will be responsibility of a designated partners. So these were the key scaling features of an LLP. We move to the next vehicle, which is a private limited company. This particular mode of a business vehicle is a vehicle which gets maximum benefit across the scheme which has been introduced by Government of India, and even it is a vehicle which has been preferred by investors when they invest as a private limited company. Why so? Because there are several aspects which gives that more confidence and governance model which is there, which governs private limited company. That's the reason the advantages are there for private limited company. Now let's see what are the advantages of private limited company per se which are there. So for a private limited company, is that the registration is mandatory. The registration is being it needs to be done with the registrar of companies under the Ministry of Corporate Affairs. Ministry of Corporate Affairs issues the certificate of incorporation. The compliance, if we see compared to the partnership and LLP, is slightly on higher side because the compliance is based on event based and on an annual basis also. So an ongoing compliance also. So the compliance, if we rate on a compliance parameter on a private limited company, is on a higher side which is there compared to the other two. The liability is limited. It's identical to what is LLP liability is there. It's a limited, it's the name itself. The name itself is says private limited company. So the liability is a limited. It's limited to the share capital contributed in the company or what is the surplus available. So if you are not personally, you will not need to go out of pocket if there is any specific incident which occur and you want to liquidate the company for any reasons which it can come into play. As a legal status, from a legal status point of view, it's a separate entity. It's a separate legal entity in eyes of law, and there is no specific, the show goes on, whether the partners, the management keeps on changing, unless and until the company is wind up, the company goes on. There is no specific embargo that it has been related. If the partners are not, the directors are not, that then company will not run. We come to the next question, which is management responsibility. Now, who is responsible? When you come to the private limited company, is it the management? Is it the founder, promoter? Who is responsible? The responsibility is with board of directors. The board of directors and the board of directors also, if we see, there's a bifurcation. The bifurcation is who is the, there are directors which, there will be mentors who will be on the board as a part of a board of directors advising it, but then their role will be more as a non-executive one. The executive directors and the full-time directors are the directors who are responsible for the day-to-day management and affairs of the company. So these are the broadly skilling features of the legislation pertaining to different business vehicles in India, the options which are available. If you, the question must be there in your mind, then what should be the vehicle which we should select, or what will be the best vehicle which should be considered, considering we want to scale up our activity. We want to take an advantage of what are the startup schemes which are being available by Government of India. Then to answer it, we'll see the next slides are there where we detail about it. What are the advantages which different entities enjoys on the different schemes which are being introduced by Government of India. We move to the next slide. In this slide, we will basically deal with exactly what are the startup eligibility. Now, the question must be there in your mind that once I have formed the company, is my company a startup? If yes, then what are the options available? Do I need to register my my entity as with any of the authority? If yes, which are the authorities with whom I need to register it? We will answer these questions in a couple of slides which are there. So the startup, which are the entities which can be considered as a startup entity? The entities are what we discussed exactly, the partnership firm, LLP and private limited company. These are the three entities which are eligible to get registered themselves with a startup as a startup eligibility criteria. Now, the startup eligibility criteria is divided into 4 different threshold limits. There are 4 different eligibility criteria which have been mentioned. This is very important to know because at times companies are formed. Company do understand that once it is being formed, we are startup. Oh, you are a startup. That's fine. But whether you are registered or not registered, and whether you get your whether the criteria has been fulfilled or not fulfilled. That is what we needs to be understood. So what are the requirements? The requirements are that the startup needs to be register themselves with DPIIT, it's a Department of Promotion of Internal Trade, Industrial and Internal Trade, which is the governing body part of it, which recognize and give certification of startup. And the startup needs to get registered themselves within the 10 years of incorporation. So if you have incorporated a company, say in 2020, or you are planning to incorporate a company, or you have already incorporated a company, then you need to get registered your entity within the 10 years vintage period of the company. The second threshold limit which needs to be fulfilled is the annual turnover. Your annual turnover, that's a revenue, should not exceed 100 crores. Then only you will be eligible. The moment it exceeds 100 crore, you will be deregistered as a startup. You will be not eligible to be considered as a startup, and you will be not entitled to the benefits which are, you will not able to avail the benefits which are available for a startup. Now, the main crucial point which we come into it, what exactly is a startup? Which entities? Now, there must be idea which you have formed, and there are the ideas which are there which you think that this business model is a startup model and I need to get registered. But there is a specific criteria which has been defined by DPIIT, which says that the business idea which is there needs to be, there has to be innovation, either a development or an improvement for the product, process or service. So whatever idea which is being formed, if it falls under the bucket of the requirement of the entity which is there, the business idea, then you will be registered, then the entity will be registered or considered to be as a startup, or else it will be not. And the other, if these three parameters are not fulfilled, possibilities are there. If there is already an existing company, then these three parameters might not be fulfilled. Then what is the requirement to be fulfilled? And the requirement is that the business model is it, if it is scalable to the level where you can generate high potential of employment or a wealth creation. If this is possible, then also your entity can be considered to be a startup entity, part of it. Now, there are certain negative requirements. These three are the positive ones. The negative is that there are certain restrictions. What are the restrictions of the startup? The startup should not invest either in jewelry or any other assets, part of it, or mode of transport that cost of more than 10 lakhs. Startup should not, the investments which startup ratios, they should not do as a capital contribution, as a share or security in any other companies. They should not advance the amount, that's a loan and advance, other than ordinary course of business, because loan and advance as a part, as a business, you will be required to do on day-to-day basis. But other than ordinary course of business, if you undertake, then you are not eligible for it. Then startup should not invest in the building that is residential house or consider that particular asset as a stock in trade. These are the negative aspects of the startup which they can't do, undertake the activity part of it. Now, the question will be, what is required? Now, if suppose I fulfill the criteria which is there, once the criteria has been fulfilled, how should I get registered? The process is simple. Government has launched, there is a specific application and a website, a portal which has been launched by DPIIT, where there's a one-page of simple form which you need to fill up. What exactly the business activity has been undertaken, mentioning the date of incorporation of your entity, whether it's partnership, LLP, or a partner or a company, private limited company, and a write-up on your business idea needs to be filled and needs to be submitted with DPIIT. Now there are two stages over here. There are two registrations which are required. The startup gets a registration from DPIIT. In that, there are several advantages which are there. Now, if the startup wants to even have an advantage under the income tax act, that is, they want to claim the exemptions of the under the income. There are various exemptions which we will delve into the slides which we have covered up the different stages which are there. Then it specifically, then they need to get registered themselves with Inter-Ministerial Board, which is IBM also. So there are three different parameters which have been mentioned, and two separate registration, that is DPIIT registration and IBB registration, which is required to be undertaken by startup. So this slide basically says about the startup eligibility criteria. And when we see in last 6 to 7 years, it has been very eventful for the startup company and also for the investors. because there has been a shift in dynamics from the intergovernment notifications, intergovernment act, which has been policies which are being framed by the startup part of it. And there are a lot of positive part of it. Mindset of regulator has been changed and moved towards startup. They are promoting startup. A lot of innovations is being, when the startup culture has been set up through the whole investment sentiment. If you see the graph of the investment in last 6 to 7 years, the investment sentiment has been changed, and we are considered in the world after US and UK. We are the third most country of the startup. We are having the maximum startup in India. It almost, we have from last couple of years, it is 108% startup has been increased in India. So that is the way it is, that there is a lot of support. Overall regulatory atmosphere is more favorable for startup, and a lot of initiatives are being taken by the ministries also. We move to the next slide. Now, you must be reading about lot about MSME. MSME is a buzzword of late, but always the question which is there in mind of an entrepreneur and even a startup and even the existing companies which are there: what exactly is the difference between a startup and MSME? What is MSME? When does my entity is considered to be an MSME, or when does it is considered to be a startup? Startup we have already dealt. I will just touch upon the MSME part. The MSME prior to 26 June 2020, the bifurcation of MSME was from manufacturing enterprises and service enterprises. The bifurcation has been taken off to promote more MSME and to give more advantage to MSME to undertake various business activities. So now it has been it is a combined definition of manufacturing and services. There is no specific bifurcation for the manufacturing enterprise and service enterprise which is there. But there are 3 different components. What are 3 different components? It's a micro, small, and medium. So when you classify yourself as a micro, small, or medium, there are 2 parameters for it. The two parameters which distinguish whether the entity is micro, small, medium is about the investment and turnover. When it is considered to be a micro enterprises. A micro enterprise is when your investment is less than 1 crore and your turnover is less than 5 crore. Then your enterprises will be considered as a micro enterprises. Now, when it is considered as to be a small enterprises, which is there, when your investment is less than 10 crore and your turnover is less than 50 crore, then your entity is considered as a small enterprises. And the last segment which is there is a medium enterprises, when it is considered to be a medium enterprises. When your investment is less than 50 crore and turnover is less than 250 crore, then enterprise is considered as a medium enterprises. Now, the question which usually is always there in everyone's mind: is a startup an MSME or an MSME a startup? This is a question which we will do in the next week, because there is a lot of confusion, lot of ambiguity which is there, whether a startup can be an MSME or whether both they can enjoy the benefits of both, of a MSME also and a startup also simultaneously. Yes or no? We'll do that. And the second part of a startup, which we have already done in detail, what exactly is a startup. So we move to the next slide about the major differences between an MSME and a startup. We'll request if anyone has a question to please raise the question. We will be happy to have questions while discussing the presentation also, and we have a separate Q&A session also which is there. But if any specific questions are there, we will happy to get questions in between also. We would like to have an interactive session. We move to the next slide, which broadly speaks about the legal differences between a startup and an MSME. So, to answer the question, yes, an MSME can be a startup and a startup can be an MSME. You know, what are the differences? What are the key highlights about MSME and a startup? As we discussed in the previous slide, there is a threshold limit for to classify the company as an MSME. So what exactly it is there? The investment limit for MSME is 50 crore and the turnover is 250 crore. So if that's a maximum cap which is there, the moment that cap has been reached, then you need to deregister your entity. Now the entity segment under the MSME is a very broad. It's not limited to partnership, LLP or a company. Even a trust, even an AOP, that's association of person, can be a part, or even a cooperative society can be a part of an MSME. But for a startup, it's limited to liability partnership, limited to the company and LLP. So, in a startup, the turnover limit is 100 crores. The moment you reach the turnover limit of 100 crore, you will get deregistered with the startup. Now the question is, what if? What if I get deregistered? To answer it, you will not be entitled to the benefits. That's the simple. Otherwise, you will be eligible for the benefits. The moment you deregister or you are not entitled, the benefits, you will be not entitled to the benefits. The second point is that the MSME, when you should get an MSME, what is the duration? Once you have registered yourself as an MSME, there is no specific time limit for it, for an MSME part of it as such. But for a startup, yes, there is. Maximum 10 years. It can't be more than 10 years. So there is the vintage is available, the window is available, is only 10 years period which is there. Now for MSME, to register yourself as an MSME, there is a specific requirement. You need to recognize yourself. You need to get recognized by an MSME. You need to register yourself as with a ministry, MSME ministry, and you need to file Udyam registration. This is a new concept which was launched in July 26. My bad. It's June 26, 2020. And the registration is been opened up from July 1st, 2020 and is available till 31st March 2021. The existing entities and the new entities which will be which want to claim benefits under MSME needs to get registered themselves with the Ministry of MSME, and the deadline is March 31st, 2021. To register with as a startup, you need to register with DPIIT. Separate application has to be filed. Then there are tax benefits. The MSME does not enjoy the angel tax benefit which a startup enjoys. A startup has a specific reference. They have an exemption from an angel tax point of view. We will delve the what exactly the angel tax is in the coming slide. What exactly are the tax benefit which a startup is entitled to it. Then there is no specific tax holidays for MSME. Startup do enjoy the tax holidays. For the 3 years, in a tenure of a 10 year of a startup, 3 years are being entitled for a startup as a tax holiday, which there is no tax to be payable by the startup. Then benefits which are there, the benefits of MSME gets covered under the MSME Act 2006, and for the startup, there is a separate, there is no specific asset registration of token which is required, but it gets covered from a DPIIT and INB registration. Okay, we move to the next slide.
Vishal, prior to that, there is one question.
Sure, we'll take the question.
Yeah, from Dolly.
Sure.
The question is in the message. The question is in the chat folder, Vishal.
Yeah, just. Vivek, can you please tell me the question? What exactly is?
Shall I ask the question?
Sure, Sangeeta, that should be fine. Yes, Sangeeta, please.
It says, if an entity's investment limit remains up to ₹1 crore, but turnover exceeds ₹5 crore, do you become a small unit or remain a micro unit?
Okay. Then to answer this question specifically, see, the parameters of under MSME which is there, it is a dual parameters. Earlier, that was a separate parameters which is there. The investment and turnover has to be read together, which is there. So in that particular case, you will become a medium because it's a dual thing. Earlier, it was either investment or turnover. Now it is being clubbed as an investment and turnover. So it needs to be read together. Sangeeta, hello.
Does that answer Dolly's question? Dolly, do you want to?
Dolly, you want to ask?
Hello, can you hear me?
Yeah, we can hear you.
Yeah, this is because it is and, it's not either or. So supposing your turnover exceeds by a few lakhs, do you automatically go into the small, or from small do you go into medium? Because that is not clarified in this new definition.
No, yes, certainly you are right. It is not.
We have to clarify this with the government, I think. This question has been asked by startup.
That's a good question, Gauri. So to answer your question, if we see, as you rightly said, it's a dual thing. It's N and not N and OR, which has been specified. Earlier it was OR, now it's N, which is there. So to my belief, till the time the clarification comes from government side, I think it will be remained the retain, because both parameters need to be satisfied at given point of time. If we are satisfying one parameter and not the another one, if suppose turnover is been satisfied but investment is not, or investment or turnover vice versa, then it will be not. So we need to consider both the parameters to be satisfied. If we move from either from a micro to small, or from small to medium, or medium to small in that particular scenario. But definitely, as you rightly pointed out, this has been the clarification has been awaited from the government. That's right. But in our view, as a point from an interpretation point of view, we think both needs to be satisfied at a given point of time.
Okay. Okay, but I think this needs to be clarified, because micro units get a lot of benefits.
Correct. You are right, Dolly.
Micro and small units get a number of benefits from government. That's why it needs to be, because they may not want to exceed and go into the next segment, you know.
Right. But but we will have to go by what is the current letter of law, because the requirement.
We'll have to clarify this. Yeah.
So earlier the requirement was or, now and has come into picture. So it is a dual requirement.
Correct.
As of now.
And sure, Dolly, we have in the next slide we have covered the benefits also of MSME, as rightly you said. There are a lot of benefits which are there. We have summarized the benefits which are there. We'll discuss the benefit of startup, and then we'll come to the benefits of MSME also.
Okay, thank you.
Okay, thank you for the question. The next slide, which is there, which is about the benefits under Startup India scheme. So what benefits are there? Once you get registered, the question will always be there. If I get registered, what benefits are there? So government has tried to strike a balance between the commercial sense and the governance part of it. Basically, the compliance, simultaneously encouraging the entrepreneur to start up new ventures, which is there, in line in trying to balance with the compliances which are required, and considering the startup scenario or the startup ecosystem which is there. The government, there are a lot of benefits which are being can be availed by a startup, which are being recognized by DPIIT. Again, just as a reminder, startup needs 2 registration under DPIIT and as under the IMB. So what are the benefits? The benefits are, there are in all 5 benefits which are being available for a startup. We'll start with the intellectual property right benefits. IPR becomes the core object of a startup, because generally the startup, if you see, it's either a technology enabled startup which are being getting, or either part of it. That IPR covers the patent, copyright and trademark, which we have dealt detail in other slides which is there. So fast track startup patent application is a facilitation which has been introduced by government. It's a rebate. If suppose you apply for a patent, then there is a specific fees which needs to be paid for it. There's a rebate which has been given by government up to 80% for patent and up to 50% for trademark registration, which is there, which is not available to any of the enterprises. It's not available with MSME also. The next is, there is a relaxation in public procurement norms. Public procurement norms are basically the tenders which are being availed by the government, or the PSUs comes out with a tender for the business association or business tie-up or part of it. There are always certain requirements, either a turnover requirement or a prior experience of a founders or a promoters, and even earnest money to be deposited with it. So there is an exemption specifically given to startup for all 3 parameters: turnover, experience, and earnest money deposit. Now we come to the compliance part of it. Mostly the question which is there, now I have formed the company, what compliance I need to be followed? That is a question which needs to be answered and which needs to be done. So what government has done, considering the scenario, the government has moved the regime from a compliance regime based to a self-certification. That if a self-certification has been done by the promoter or founder, that will be considered to be as a valid. And for initial years, that is 3 to 5 years, this relaxation has been given. The relaxation has been given under 6 labor laws and 3 environment laws. And total, there are 27 states who have been signed to this particular part and introduced the self-certification from a compliance point of view. Fund for startup. Now, the point comes, how can I raise funds? How will government help me from raising funds? So there is an FOF which is being set of 10,000 crore, which has been managed by SIDBI, and simultaneously there is a credit guarantee funds which are being given for the startup which is there. And there is a faster exit. Consider if a startup wants to exit, then there is a specific notification by which within 90 days period of time you can wind up the company and an exit can be provided to the investors or even to the founders for the startup. These are the benefits for the Startup India scheme. We move. There are tax benefit now. The tax benefit comes under the IMB registration, which is there. We'll just quickly delve to the tax benefit. What exactly are the tax benefits? The tax benefits are the tax exemptions on the capital gain tax. Now, what exactly is capital gain? Consider, say, suppose there is a long-term capital gain tax which has been there, then you can invest. The investment done in a startup can be considered as an exemption out of it, out of the long-term capital gain which gets invested in there. There are certain threshold limits which are there under Section 54EE and 54GB of an income tax. And there's a tax holiday for to startup recognized by IIT. What this tax holiday exactly is? The tax holiday is that from a vintage of 10 years, 3 years is being given to a company that they are not liable to pay any income tax to the authority. This is an advantage which has been given, and there's a specific criteria to which startup it is applicable, which are incorporated after 1st April 2016 and which on or before April 1st, 2021. Only this startup can available this particular benefit. That's a tax incentive which has been given. Then the last part from a taxation point of view is about tax exemptions on the investment of the fair value, which is angel tax part, which you must have read. I'm sure it's a very buzzword, and there is a lot of changes which has taken place from the year 2016 till the now about the angel tax. There is a lot of hue and cry which has taken place both for the companies and an investor, whether it's eligible, not eligible, how to claim, when to claim, on what exactly the premium, because you must have read if the face value, fair value of a company considered comes to 500 and the issuance take place, the shares are being issued by the company specifically at say at around 1,000 rupees, then the balance, the difference 500 over and above fair value had to be borne by the company and the tax was applicable to it. But there is a relaxation being given by DPIIT, and but for that you need to specifically register yourself to claim this benefit of angel tax. The angel tax benefit is available to the companies part of it because it was on company to pay on the investment raised by them. So these benefits are being availed by the private limited company. There was a specific reason I highlighted why private limited company is a vehicle which is more favorable compared to partnership and LLP. We move to the next slide quickly. The part is the benefit available to MSME. This is the question which Dolly was highlighting, but which are the benefits which are available? The plethora of benefits which have been available to MSME is there in specification to it. It's a payment of use to MSME. There's a specific criteria which MSME Act has been specified. It's 45 days. If you have raised the invoice and the buyer is not making a payment to an MSME entity, then he is liable to pay an interest on it if it goes beyond 45 days. 45 days you can consider as a working cycle for the payment mechanism for an MSME part of it. Then there is a liberalized norm to go to public or to stock exchange. There is a specific dedicated stock exchange, MSME stock exchange, which is being there by NSC, National Stock Exchange, and Bombay Stock Exchange, which is there, under which there are relaxations has been given from a listing point of view. Then we come to the what exactly is required from a loan. If an MSME is want to scale up the business or they are in need of funds, then where to approach? Either you raise the capital or you approach bank to take a loan. Now, whether you will be eligible to it, yes, you will be, because MSME is being classified as a priority sector lending. It's a PSL. Priority sector lending is a construct which says that a bank needs to lend first to the priority sector, at least 40% of that lending which they do during the financial year. And out of 40% of the PSL, MSME gets at least 7% part of it. And the next is exemption in the direct tax flows, which is being given to MSME, and the procurement preference similar to the startup which we have read under the when the PSU contracts are there. What are the additional advantages given? There are certain subsidies given on a power tariff basis, specialized industry estate, as he said, has been if the IT technology park, if you establish in there, various other benefits which from a state to state it differs for MSME. And the other part is there is a separate requirement for all the entities, whether it's a PSU, whether it's a listed company, which needs to specifically mention what exactly are the dues which are due to MSME. There's a specific section which they need to specifically mention what are the dues which needs to be payable to an MSME section which is there. So these are the more benefits which are there for a startup and MSME. Now as an entity, you can claim both of them, but for that, you need to register for both of them. If you register with either of it, then you can't have an advantage of it. Otherwise, you can have an advantage of both MSME also and a startup also. The next slide is more about the checklist of essential agreements from a governance point of view. Now, the question will be that once the formation is done, we know what are the advantages. Now, what are the documentations? What type of documentations which are required to be formed or which needs to be taken care? My colleague Vivek will take through the next slide on the checklist for essential agreement.
Right. So as Vishal has already deliberated a lot on forming your entity in a possible way under the legislations of India and what are the advantages and disadvantages attributable to them. So once you have established your entity, the consequent step is that you engage with your stakeholders. For any business entity, the stakeholders are its customers, are its employees, are its vendor, which, you know, the stakeholders are typically those people and those entities which further the objectives of the business of any enterprise. So in this slide, we have dealt with certain agreements which any startup or a non-startup entity as well must enter into in order to regulate its relationship with its stakeholder. So let's start with one of such first agreement. First agreement, for example, is the founders agreement. Founders agreement is typically between the founders who have set up a company. While this is not a agreement which is required per se, but it is always a good to have document, because tomorrow in future, if the startup or the entity goes for seeking investments from third parties, this is the document which also gives them the comfort that founders have also entered into the founders agreement. So typically the domain and the scope of the founders agreement is to take care of the aspects which deal with intergovernance of the founders. For example, if two founders have established or three founders established in any organization, then what are the rights, roles, and responsibilities of all specific founders vis-a-vis the company? What will be the lock-in on shares? Because once you have set up a company, founders would typically internally want to have lock-in on shares for, let's say, for 3 years or 5 years. What will be the restrictions in case any of the founders wants to transfer its shares? What are the restrictions and what are the aspects? For example, if some founder has, has committed fraud or has been held for something in relation to the fraud. So all these aspects are duly covered under the ambit of the founders agreement. There is also, for example, as we typically call it in our corporate jargon, for something like the reserve matter list we have. So if you are a 3-founder company, you have a founders agreement. For those matters, you will require at least approval of the 2 founders, whether you require unanimous approval of all the founders and all the matters. So typically all these aspects are covered in the founders agreement. As I have said, it is not a document which is required as a must, but it is always a good to have document because it showcases if you have to take investment from a third party in future, this document will also give them the comfort. Now we move on to another set of agreement which typically one has to enter in. For example, non-disclosure agreement. So non-disclosure agreement, the functioning of the non-disclosure agreement is such that you may have to enter this with your employees as well as founders, and also may have to also enter into this agreement with your vendors and maybe your investors as well. In case you are providing or passing any confidential information to, for example, to your employees, or say the founders, most probably that will be covered in the founders agreement itself, or you are passing on any confidential information to your vendor for the purposes of the services that vendor is rendering to you, then it is important to have a non-disclosure agreement or a clause relating to a non-disclosure agreement in a specific agreement in place. So idea is to prohibit disclosure of your confidential information other than for the purposes for which, for example, employee has been engaged, for example, a vendor has been engaged. So that the information and the trade secret of the company is protected. Okay. Third set of that agreement could be contractor agreement. For example, once the company has been established, company wants to commence its business, company will have to hire consultants, company will have to hire contractors. So you need to enter into a contract with them, and that contract should be holistic in nature, and that contract should contain, and address the aspects which deal with what is the scope of the services, what is the fee of the services, on what grounds the agreement can be terminated, whether that consultancy services or whether that contractor agreement is exclusive in nature, not exclusive in nature, that contractor should not be able to take your information and use that in the business of some other entity to which it is providing services. So all those aspects need to be protected from the point of view of the contractor agreement. Another very important aspect is the contractor agreement, and also in the employment agreement as well, is that whatever work that contractor has done using your resources or under your directions, that intellectual property right should always belong to the company. The contractor should not become the owner of that intellectual property right. So moving in the same sequence, moving to something like employment agreement. Again, employment agreement is important. You will have to engage employees. Employees will have different rights and responsibilities. Employment agreement, as far as employment agreement is concerned, you may have different set of employment agreement depending on the nature and the designation of the employees. If the employee has higher designation, has more access to trade secrets of the company, has more roles and responsibility in the company, that employment agreement may be a bit different than an employment agreement of a normal employee. But if it involves an important employee, then at least employment agreement should take care of all those aspects which deal with, for example, remuneration. If are there any performance parameters, what are the roles and responsibility of that particular employee? Are there any probationary period? What protection of the intellectual property right of the company, that any work which has been done by the employee during the course of this employment shall be treated as work made for hire. That means basically you have done some work on behalf of the company, and all intellectual property in relation to that work made for hire should belong to the company. Also the notice period. For example, if it is a termination without cause, I mean if it is a termination during the course of the things which does not involve any breach on the side of an employee, there typically it is 30 days, 60 days, 60 days termination notice. But if something happens, the employee commits fraud or breaches an employment agreement, which has an effect on the reputation of the company. So typically companies want to terminate the employment contracts forthwith in such a scenario. So these are the aspects which need to be kept in mind when drafting an employment agreement in relation to an important employee of the company. The other set of related contract, again, which we have already spoken in relation to work for hire contract agreement, is intellectual property assignment agreement. So if any intellectual property has been developed by any employee or any contractor during the course of his employment or services with the company, so typically it is always also advisable that that particular contractor or employee also enters into a assignment agreement in relation to intellectual property that he has developed with the company. So idea is to ensure that ownership always belongs to the company and there are no fetters to that ownership from the documentation point of view as well. So tomorrow if there is a dispute, all these kinds of documentations will help company to establish ownership over the intellectual property rights. Now, in relation to vendor, supplier, or distributor contracts, while we have discussed about the scope and the fees, the important aspect is to see that for example, if it is a customer contract or a vendor contract, what we have to see, what is the cancellation. For example, if you have to sell your products through Amazon or through LBB or through other similar platform, what you have to see that what is the cancellation policy, what is the return policy, what are your indemnity obligation. Indemnity obligation in simple words, if I put, what are your obligations to compensate them if there is any breach of product, if there is any breach of agreement on your side tomorrow, or if there is any product liability which comes on to that platform because of your product tomorrow. So all these aspects to be kept in mind. For example, indemnity obligation, right to compensate obligation should only be limited to direct losses which have happened. It should not be very open-ended, otherwise the losses can be very high in certain scenarios. Termination terms also, especially in light of COVID, in relation to vendor and customer agreements, something like force majeure has to be kept in mind, because force majeure for past 6 months, this concept has been very active from implementation point of view. because a lot of companies have been finding it very difficult to ensure that their supply chains are working on time, and so that they're able to actually implement and comply with their onward contracts with their customers as well as vendors and other stakeholders. So force majeure is something which should be kept in mind, that if something happens which is beyond the reasonable control of the parties, act of God or something like that, something like COVID, then it should not necessitate a breach of breach of an agreement on side of either of the parties. Then another set of contracts could be lease agreement. Now, lease agreement typically, these will be standard form of agreements, but lease agreements, what perspective we should have, entrepreneur should always keep in mind. Obviously, the rent is always there, but what are the terms of escalation of rent? Who will undertake the repairs? Whether the landlord will undertake the repairs to the premises, or it is the obligation of lessee to undertake the repairs, etc., to the premises. For example, if an entrepreneur in a co-working space and you have rented a premises in relation to co-working space, then that lease agreement should also allow your users to access that leased premises. And in turn, you need to have back-to-back user agreements with your actual users who will be using your co-working space, for example, that they should not undertake any activity which culminates into you breaching the lease agreement with your landlord, because your users will not be party to your lease agreement, because number of users, user space will keep changing over a period of time. So Vishal, we can move on to the next slide in that case.
So as we have discussed the essential agreements which are required pertaining to the different stakeholders, we move to the plan which is required, a ESOP plan, which again is a buzzword of late and thing which usually a founder consider while forming a company, because it's an ESOP plan is basically to attract the talent, to encourage the employees and to retain the employees. Is a compensatory model which you can say other than cash consideration, which can be given to the employees, and ownership can be given to employees through an ESOP model which is there. So what exactly is ESOP plan, which says that ESOP plan are the tools which requires which has been formed. ESOP plans have been formed by the company, and there is a specific requirement which states that's a vesting period, vesting of option. So once there are your eligible employees have been identified, it is not that all employees will be eligible for an ESOP. So management will decide, and as per the law, as per the Companies Act, there is a specific requirement who all will be eligible for an employee or for an ESOP under the ESOP plan. The eligible employee will be entitled for the ESOP. Now there is an ESOP life cycle. What exactly is ESOP life cycle? What does it mean by it? It is, there are 4 stages which are there. If you can see at the bottom of the slide, which we have tried to capture the slide, is that grant of option is basically an offer given by a company to an employee, to an eligible employee, by which, say, a number of shares, 5,000 shares have been given by the company to the employee. Now, vesting of option. Vesting is that is an offer is being given. The person can, it is being vested to that particular employee. The period between a grant of option and vesting of option is 1 year period as per law, the time like which is required. Once the options are being vested, what exactly the employee is required to do? The employee needs to exercise the vested option. Suppose 5,000 grant options were given, 5,000 has been vested and 5,000 has been exercised. Then what is the next step? The last step is allotment. The shares will get allotted to that respective employee. So this is the life cycle of an ESOP mechanism and ESOP part of it. Right, and the shares which the employee is entitled is at a discounted rate. It's a predetermined price, and because the reason it's predetermined price is that if you're granting an option today, and if it is going to get the vesting will take place after 1 year, the employee will get the advantage of the premium amount or the market value, the fair market value when he actually exercise. So that's the reason it has been given at a discounted price, and to encourage employees to retain the employees part of it. And simultaneously, it's an incentive which even a promoter, generally an ESOP pool is being carried out in the cap table when we prepare for a private company. It's an incentive for the promoters also simultaneously. So these are the aspects of an employment stock option plan. we move to the next aspect. What are the now we have dealt with the requirements of registration, requirements of documentation, requirements of the formulation of the policies which is required from an employee point of view. Now, how does the regulation, what is the regulator regime in India? What exactly is that in India? And what are the three different parameters which are there?
So as far as regulatory regime in India, India, as all of us know, the center has the power, state has the power, and there are a lot of laws which are also implemented at the municipal level. For example, at the central level, all of us are aware there is something like Income Tax Act, Goods and Services Act. At state level, Shops and Establishment Act are there. State Trade and Profession Tax Act is there. At local level, we have some laws which are legislated by municipal corporations and panchayat as well. So this is how, as far as the federal structure of India is concerned, as governed by the Constitution, all state participating entities as well as the centers and the municipal level organization entities also, they have a power to legislate on certain matters from time to time. Now, as far as the business entities are concerned, the compliances with these laws are basically factored from the point of view of, for example, making filings, making reports, generating statements, undertaking those filings on a quarterly, half-yearly, or an annual basis. And that typically depends from business to business, and as well as on the nature of the business. You can move to the next slide.
Sure, we move to the next slide. Yeah. The brief overview of registration requirement. So what types of registrations are required? Because see, complying with the law in India, it's a task. Because there's a lot of complexity with the existing law, and even you need to keep the employees of the organization updated about the changing laws taking place, about the changing dynamics which take place, even with, due to the geopolitical tension which is going on right now. There are a lot of dynamics which has been changed in the last 4 months, part of it. So that becomes more so as a time consuming also, and at times even cost part from a compliance cost also comes into play. But what exactly is there? We have discussed upon the essential registrations which are entity which requires to be done, irrespective of partnership, LLP, or a private company. The registrations are under the that's a PAN number, permanent account number, tax account number, which has been required by all business entities. The registration, the PAN and 10, it required after incorporation. Now there is a SPICE 32 form. Say when you incorporate a company, there is a ease of business, which you must have read a lot about it, you must have heard about it. Doing business in India, there is a ease of doing business in India which has been launched. But there is a specific form which has been launched. At the time of incorporation itself, you are entitled for PAN registration, for GST registration, and even opening of your bank account. Everything is being aligned and as a one part of it. So your PAN and 10 will be taken care over there. And the issuing authority is Income Tax Department. MSME, as we have discussed, it is the Ministry of MSME which governs the MSME and the registration part of it. And anytime after incorporation, once the criteria or any of the bucket which comes into play, whether it's a medium, small or micro, small, medium, it will be, the registration will require to be done. GST, there is a specific threshold limit for GST registration, which is based on the turnover of the company, turnover of the enterprises, which exceed 20 lakh, the registration comes into play. Then, as my colleague will highlighted about the shop and establishment. Shop and establishment is a local law requirement. It's a state law basically, which requirement which comes into play. So if you are having office in the state of Maharashtra, state of Karnataka, or any other part of India, anywhere you will require a shop and establishment registration for all your entities. And that has to be required to be taken within 30 days of operation. And a local judicial municipal corporation is responsible for it. Then we move to the next part of it, which is a trade license. Trade license is for undertaking the business service activity and the professional tax which gets deducted. Again, this is a state subject and it is required to be done. The registration has to be obtained as from the local municipal corporation. So these are the core requirement, fundamental requirements, other than aspect of the sector which you are in. If suppose if you are in a fintech player is there, or then there's a specific registration under RBI which comes into play. Or if there is a specific sector which on the biotechnology part of which comes, then there's a Ministry of Biotechnology which comes into play. So sectorial registrations are separate, which depends upon the business activity being undertaken by the company. which will also be simultaneously required to be taken by the company. Now we move, once we know what are the registration setup is being done, what are the key compliances or what are the laws which are applicable to the company from day one itself, or any enterprise which is there. So the key elements of compliance are basically, we have divided into 3 different buckets, which is that corporate compliance, financial and labor compliance. Corporate, what are the essential, the key acts which are being applicable, which are the Companies Act, predominantly which governs the incorporation and the governing model of a company. FEMA, when there is a foreign investment being received or an investment received from your non-resident investors. It can be friends and family, it can be a corporate, it can be an investor, venture fund, private equity investing, then the FEMA comes into play. Reserve Bank of RBI rules, regulations comes into play whenever there is a payment mechanism part is being involved into it. And SEBI part comes into play when you go on a larger part, when a scale up has been done and you want to get your entity listed, then the SEBI comes into play, but SEBI rules and regulations are being applicable. From financial compliance point of view, the financial subject itself is a complex, but thanks to there are a lot of schemes which are being introduced, relaxations which are being given by different ministries from a part of it for financial compliances. So there was recently in 2019 there was a corporate tax structure has been reduced and which has been introduced by which has been applicable, and in addition to it, as we have already dealt, what are the tax advantages which are being given to a startup and MSME from a taxation point of view, accounting point of view, and regulatory aspect which are there. The relaxations are being given. We come to the next question, which is the most complex question: labor law. What labor laws? What all laws are applicable? There are 100 labor laws which are there to answer the questions. State laws, which are state laws, central laws, compliances, which can become applicable to an enterprises or a company which is there. So that a startup will always need to be considered while forming a business activity, which law under which will be applicable and not applicable to it. So we move to the next slide where we have dealt in detail about the labor law, because that is the complexity which itself is there, and the plethora of compliances which comes under labor law. We have just given a brief overview of labor law. So usually once a company is incorporated, the documentation is in stage. The first thing which will be required, employees. Now, whether you want to hire an employee or whether you want to take a employee on a contractual basis, both has separate different aspect to it. What are the aspect for it? Contracted workforce and permanent employees. Now, both has advantage and disadvantage of its own. Say suppose the contracted workforce is there, then in that case, the labor law compliances, the labor law benefits, and what benefits an employee is entitled to it is not being, they are not, the contractual employees are not entitled for the benefits which are employee is entitled to it per se, which is there. So there is a cost saving under that. No employment benefit will be given to them, but the risk factor is there. The risk factor is that you will be sharing your confidential information. They will have an access to your confidential trade secrets part of it, which is a red flag. So if when you hire a contracted workforce, the agreement has to be very well been watertight from a responsibility point of view and from a liability point of view to that extent, because at the end of the day, the safeguarding of a confidential information will be the utmost important thing which will be required. Now, when you consider permanent employees, the permanent employees construct, what exactly it gives. So for a permanent employees will be entitled to all types of consider the benefits which are being given to them. In addition to that, what safety as an organization, the organization will get a safety from a point of view of the confidentiality, the loyalty of an employee which is there, and always there will be an employment agreement by which whatever invention, as my colleague has highlighted, the IP assignment agreement, which will always pass on to a company during the work for hire basis which comes into play. And there are certain applicability of various labor law. The 4 essential one which we have highlighted are the Employees Provident Fund Act, which is applicable if you employ more than 20 employees in your organization, then this particular act comes into play and it is applicable to enterprises. Payment of Bonus Act, again, if there are more than 20 employees, then it comes become applicable to an enterprise. It's irrespective whether it's an MSME or startup, these particular laws are applicable to them. No doubt there are relaxations which are being given. The one which we discussed, self-certification, and the compliance regime has been moved to the self-certification mode for startup, but that is for initial period of 3 to 5 years. And the payment of gratuity is applicable if you are more than 10 employees are there in your organization, and once the 5 years is been completed, it is the post completion of 5 years of an employee, the gratuity kicks in and it becomes applicable. The most sensitive part, which is the sexual harassment of women at workplace, prevention, prohibition, and redressal part of it, which is the key act which is applicable. And what are the requirements? Now, it does not say that if you have a workforce of 10, 5, or 2, then only it becomes applicable. There's no such threshold. Even if there are 2, 5, then also it is applicable. Even for 2 employees or 5 employees, this X comes into play and it's applicable. The only limitation which is that if it is 10 or more, then you need to form a committee which is called ICC, Internal Complaint Committee, which has to be formed, and the validity of the committee is for 3 years. Every 3 years, the members of committee needs to change. So that is a specific requirement, a brief overview of labor law for either of the entities either of the entities of business vehicle is being considered. The most crucial part which comes is the technology. Since most of the startup either is IoT or there's a tech element into it. If the moment the tech element comes into play, the Information Technology Act 2000 kicks in and the provisions becomes applicable. We have dealt with the specific rule which is of data protection, because the technology tech-based company deals with data, and the data is of consumer data, there will be third-party data which comes into play. So what are the requirements under the SPDI? That's a sensitive personal data information, which is required to be protected for it. So there is a privacy policy which company needs to form. If whether you have launched an app or a website which has been launched, what is the basic requirements? That needs to be a privacy policy which will detailing about the consent mechanism. Once the information is being taken at the time of login, that will be required, and what will be the grievance mechanism by which company has, what type of security company has put in place, the reasonable security practice and procedure will need to be governed in it. Then the consent has to be expressly, there's an explicit consent which is required to be obtained while obtaining an SPDI information of any of a user or a customer which is there. And company needs to comply with the ISO certification, that is ISO 271, which is amended. All tech-based company will require to maintain and keep an ISO certification, which is part of it. So next we move to the regime of foreign direct investment. Now, once you have established that the organization has been set up, initial funding has kicked off from friends and families, Series A round has been done, you want to scale up the company, the foreign direct investment regime comes into play. So what exactly is? The foreign direct investment is that investment whenever it's been done either from a non-resident in India non-resident investors or a foreign entity, it will come under foreign investment. So there are specific 2 routes which are there. The entry route is either it's an automatic route or government route. Now what is the difference between it? The difference is that for automatic, there is no prior approval required. You can just the investment can once the investment is been received in the company just needs to inform there is a filing which is required to be done by the entity with RBI. That's the only requirement under the automatic route. What's the government route? Government route is a specific prior approval which is required to be undertaken prior to it. So just to give an example over here, as we know, because of the geopolitical tension which is going around, in month of April, there was a tweak in policy which has been done, and we have seen the results in last 2 months. Lot of China-based apps or the source or the control which China has, that has been restricted. Now there is a tweak in policy which has been done. What exactly was done? Initially, the investment from China was under automatic route. The tweak is done. Now it is being moved to government route, which is an approval route part of it, which is there. So any investment comes from China route comes under government route. Earlier it was automated. Just to give an example, this was a latest example which is there. What the difference between an automatic route and a government route which is there.
Right. And few more examples we can give to our participants as far as examples on automatic as well as the government route. For example, Print media, publishing of newspapers, 26% FDI is allowed only with the government approval. For example, air transport services, beyond 49%, one has to take approval from the government. So these are the, for example, examples when government route is applicable. Automatic route is applicable in a lot of activities. For example, hospitals, FDI in hospitals is on automatic route. FDI in food products, retail trading is on automatic route.
Hello.
Shall we can move forward? Yeah.
Sure. We move to the next slide now. Okay. So this is about the protection of IPR. What exactly is IPR? As we have touched upon the IPR aspect in the previous slide. IPR is the more or more startup is tech-based startup which are there. The more crucial it becomes to protect your IPR, because IPR is your capital. In a say, it's an intangible capital which is there, which requires at most protection because it's your idea, it's your process, or it's your product or your service. Everything can be covered under IPR. Now there are three different aspects of IPR. What exactly? What? Copyright. Copyright is an aspect which is there. There's no specific registration required for copyright. The moment you create, say there is a thought which is there, which is in your mind, and the moment you write down that it's your copyright, you are the owner of it. It's an authorship which comes into play. There's no specific registration with any of the entity required, and you can claim your copyright of the process which you have prepared. It's your entitlement. It's an exclusive right to be given for a reproduction to the authorship of the owner of the copyright. Which is trademark. Trademark is the design, the logo, which distinguishes your specific services, your product from it. The shapes, the name, the word mark, the well-known mark, everything comes under trademark. And there is a specific registration being required for trademark. You need to file with the authority, and you need to upload. The certificate is valid for 10 years. Every 10 years, you need to renew your trademark part of it. So the registration of a trademark becomes that essential, and you need to protect, because it is what will distinguish your service with your competitor. Comes the patent. What exactly is the patent? Patent is for the process or the part which is that of the innovation or the product or process part of which is being planned. So that the product, to claim patent, there is certain criteria. The criteria which are being specifically mentioned under the Section 3 of Patent Act, which needs to be fulfilled. It has to be an innovative, novel product or process which has to be there. Then only it can be patented. For a patent, to claim your product or process as a patent, you need to file a patent application with the authority. There is an examination which has been done, how different it is, how novel it is from the existing product process available in the market compared to it. Then only a patent, because at the end of the day, a patent is a monopoly being given to the founder or to the company which heads, and which you can incentivize out of it, you can trade off it. So these are the three key elements of an IPR, which regards from the copyright, trademark, and patent. And the most crucial, all three of them needs to be protected depending upon the business line of business which has been selected by the entities. Please free to ask any questions if are there. We move to the next point, which is the post incorporation. Once an entity, that's a private entity, has been formed, private company has been formed, what all formalities are required on immediate basis on day one kickoff? What are the things which are required to be there? There are certain governance and compliance point of view which we have highlighted, which is required to be maintained by a company. That is, maintain the copies of incorporation document, the charter documents basically. And for the first board meeting, the board meeting needs to be held within 30 days of your date of incorporation of a company. Appointment of auditors needs to be done within 30 days of appointment of the formation of a company. Disclosure of interest of a directors. This is more from a compliance and governance point of view. The initial first director has to give the disclosures to the company about their interest, which are there in other entities, if any, which is there. Delivery of security certificate are basically one, if you and your colleague, if you are there, if you start up a company, then the subscriber to memorandum is entitled for a share certificate which needs to be delivered. Then the maintenance of statutory registers, there is list of bucket list of registers which are required to be maintained by a company, which needs to be maintained on regular basis by a company, and depending upon the activity, it needs to be regularly updated. Then you need to adopt your adoption of your business letter bill heads. Now this is a classic example I will tell you. So once it has been formed, people start doing it as a normal, but there are certain requirements. You need the business letters needs to comply with specific requirements, specific details needs to be given on your business letterheads, which are that, or the letterhead which has been adopted by the company. This is the SIN number, corporate identification number, your telephone number, email address, registered office address, corporate office, everything needs to be there on your letterhead of a company. If it's not there, then certainly a regulator can always raise a question on it. The registration part, which we have already dealt, the registrations, which are the key registrations required. Then there is the name and address of the company entity needs to be displayed outside the registered office of a company. And there are a list of other stationery items which are required to be undertaken from a company's point of view. Common seal, which is an optional, statutory registers, which we have dealt, copies of charter document, because generally you will need to submit the copies of charter document with different stakeholders, to different stakeholders, even while opening of various accounts which are there. These are the key post-incorporation formalities which are required to be undertaken by the company. The next slide, which is that these are the regulatory compliances which we have just now discussed. We have just bifurcated into different forms, different deadlines which are there to be compliant. It's declaration by directors, declaration annual returns to be given by the company, declaration of beneficial ownership, filing of annual returns, filing of FLA. If there is a foreign direct investment, then you need to file an FLA, annual filing, balance sheet and profit and loss account filing are there. So these are the aspects which we have covered in our previous slide. We move to the next part, the regulatory sandbox. Now, what exactly is the regulatory sandbox? This is an innovative construct, concept which has been launched by respective regulators in India. It's a global approach which has been taken, a global study which has been taken. And what exactly it is there? It is, see, suppose if there is an idea which is there and you want to test the idea, the product or process or service, whether it follows the prudential norms of the respective regulators or not. Consider if you want to launch a fintech company or an edtech company, but then there are certain elements it might not within the ecosystem of the prudential norms which are there, of the legalese which are there, part of it, which are been by a respective regulator. Then for that purpose, they have launched a regulatory sandbox purpose. You can approach to the regulator, you can file an application with them, what exactly your business idea, what is the process which you have worked upon it, and the regulator can certainly check through it whether it is in line with the prudential regulation norms or not, what are the key elements, what are the missing elements which are required, how the integration will work with the industry per se which is there. So these are the different elements. That's a reason to promote innovation, to give a technology support. This particular regulatory sandbox construct and concept has been introduced in India on 2019 and 2020. Recently, the first regulator was RBI, who were launched in August 13, 2019, followed by SEBI in Feb 26, 2020, followed by IRDI recently, August 22, 2020. They have launched the regulatory sandbox concept, whereby a startup can approach, can share their details, and can be a part of a system to check whether it is in alignment with the existing law and whether it will be able to scale up to the level with other companies when it integrates with different APIs. So this is a regulatory sandbox process and stages which we have covered. Say we have taken an RBI example over here. Basically, what are the timelines which are required to be fulfilled and to test your product or service which has been there. So it is in 5 different stages, the steps which are there. Preliminary screening is about the idea, about the process, then the testing and design take place, application assessment, total assessment of the promoters along with the product services, whether there is an existing product or what is the uniqueness of this particular process which you're planning to launch, the testing of a product which take place with the industry players and the API integration, and final evaluation take place, which it's good to go launch for a commercial launch of your product which is there. So this is the process which needs to be followed. If this specific process which we have highlighted for the fintech unit part of it, there is a separate process under the SEBI regulations and even under the IRDAI, which is going. The floor is open for the Q&A.
So any question anybody has in relation to the presentation which we have given on any aspect, you need more clarity or have a question, please feel free.
I think there were a couple of comments about sharing the presentation.
Yeah.
Definitely will share the presentation.
I think
it's a lot of information to be absorbed in such a short time. So I think we will end this session over here. Thank you, Vishal, and thank you, Vivek, for an extremely detailed, extremely factual and to the point explanation of the subject. I'm sure, and we will have this session for posterity for people to access in future. So extremely valuable. Thank you so much.
Thank you.
Thank you, Sangeeta.
Thank you for inviting us to speak. Yeah.
Hello. Yeah. Can you hear me?
Yeah.
Yes, we can hear you.
So I had a question. So definitely the presentation was very nice. There was a lot of information. So let's say if someone wants to do a business or startup, then how much should he or she know? Because there's definitely lots of laws and there's a whole degree probably on this subject. So how much should one know, or should one get a lawyer?
Okay, as far as how much should one know, so the first thing you have to know, how do you categorize your entity into, whether you want to start as a sole proprietorship or you want to start as a partnership with one of your other co-founder or friend which you have identified, or you want to set up a private limited company. So that will be the first step. So typically what we have seen, people typically go for example, with a private limited company because set of compliances are lesser as compared to other forms. Or people are also preferring nowadays LLP structure as well, especially in light of there are a lot of taxation related relaxations. So once you have identified that, so as and when you have started your business, prior to you will get a lot of knowledge of what laws are applicable. This is the nature of your business. And if you're consulting a legal advisor or a similar advisor at a pre-stage itself, that will help as a guiding force to you, that point of time. Any thoughts, Vishal, on this?
Sure. As Vivek rightly highlighted, see, it depends upon what business vehicle which you select to undertake the business activity which is there. Now, irrespective of the vehicles, there are certain, if you go to the slide where we had mentioned about the registrations, the basic registrations which are required, which was about the PAN 10 MSME registrations or GST registration, shop and establishment, trade license, profession tax. This is irrespective of the entity. You will require to obtain this. These are the basic registrations which are all entities are required to obtain. Then it varies depending upon the part that whether what business vehicle, it's an LLP, it's a company, or it's a partnership fund. The other two aspects are also there, which is a sole proprietorship and a one-person company. The reason we have not dealt much in detail about the two aspects, because if you see the advantages, the benefits which are available under the various scheme of startup and MSME are limited to the partnership from LLP and private limited company. That's the reason. So apart from the basic registrations, the 5 registrations which we have highlighted, the other registrations will depend upon the number of employees being employed by the particular enterprises, the scalability part of it, and the respective state laws being applicable to from where it has been incorporated and where the functions take place. Hope that answers your question.
Yeah, so from what I can gather, basically the initial part is very important, like the first step. That's
right,
it. That's what you're saying.
Right.
So when should we like worry about like other? So should we even worry about like other labor laws or employment contracts and other things? So should maybe, let's say, if you are managing the business or if you're starting up, then should one worry about it, or it's even better? It's just better to leave it to the professional on these things.
So if you are consulting a professional, then you will get a proper guidance as to when that any particular applicable law is applicable vis-a-vis you. For example, EPF requires at least 20 employees. There are other laws which trigger once you have employed 10 employees or have contract laborers, if the nature of business is such. So once you have set up your business, then all these questions consequently come into picture. Because tomorrow, when in future, when you are going to an investor or inviting an investor to undertake a due diligence on your company for future investment purposes, these things will come into light. So it is always better to be prepared before you are doing that.
Okay, sir. Thank you.
Yeah. Hello, sir. I am Anshul here.
Hi, Anshul.
Hi, Anshul.
Yeah, I have also few questions. One of the question is like I already started a company and registered it as a partnership firm in 2016. Now, as you said that there are more benefits as for a private limited company or an LLP company. If I want to continue this as again, this confusion is coming whether I will be a startup, whether I will be a MSME, and lot of confusion. And after that. Yeah, now and other question is, then can I now convert myself from partnership to LLP or private limited so that for future funding, for example, like I am not understanding this statistics like कि अगर कोई फ्यूचर कंपनी आती है तो वो कुछ परसेंट स्टेक लेगी एंड देन it was all hodgepodge for me. Yeah, and then was I audible?
Yeah, sure. Will like to answer your question. See, we understand the concern which you have raised, and most of the startup do in hodgepodge consider the business vehicles what are initially more favorable. But the thing is, see, the options are available to you. The options are that either you convert the partnership firm into a private limited company or an LLP. Is that, and how it can be done? There are different ways which it can be done. Either that can be a dissolution of your partnership, existing partnership which is there. Either there can be a slum sale which can be taken place by the company. You can the slum sale through a slum sale agreement, you can transfer the existing assets and liabilities of your partnership to the new company. Either you form a new company, incorporate a new company, and it can be formed, and accordingly the advantages will be available. Because see, right now if we see the tenure for the benefit under the startup scheme which is available is up to the company which gets incorporated up to April 1st, 2021, which very likely might get increased. The tenure might change, but right now it is the company which are being incorporated from April 1st, 2016 to the companies till that April 1st, 2021 are only entitled for a startup scheme, the way it is. So if you want to convert into it, you can consider it, but there is a catch over here which I will like to mention. If you convert your existing entity into an LLP or a company, that might not give you additional advantages under startup, because the startup definition which the eligibility criteria is there, it clearly rule out about any restructuring, any entity which is from restructuring or through a merger amalgamation or through any other arrangement part of it, then that entity is not considered as a startup entity under the definition of a startup. A notification which is April 19, Feb 19, 2019 notification. It's the latest definition of the startup which is being redefined. Part of it over there, this expat will not get covered. So ideally, you should form to answer your question in a simple word, you should form a new entity and a slum sale transfer agreement can take place from a partnership deed to an entity. Vivek, any thoughts?
Yeah, Vishal, I very much agree with you. So if you are converting your current partnership into LLP or company, vice versa as well, so you may not be entitled to that exemptions and relaxations which one has. So I agree with you, as you have stated.
Yeah. So Anshul, it answers your question.
Yeah, it answers.
Any other questions or any other specific clarification?
From my side, this is fine for.
Okay.
So thanks a lot. We have run out of time, our allotted time for this. There are your contact details on the slide, contact details of the VERTICES partners, the founding partners of VERTICES. And so people attending this session can reach out to them. And I'm sure they'll be happy to extend their services. Once again, thank you for this and hope to see you again. And do come back.
Thank you, Sangeeta.